All right, good morning, traders. Today is January 20th, 2026. My name, Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. Thank you for being here. Let's take a look at, want to thank everybody out there in podcast land, digital land, cyber land. All right, thank you for subscribing to my content, following my content, liking my content, sharing my content. Special shout out to the people that share. All right, that'd be Bob Jordan, John Jordan, Kathy, Sarah Roasted. Thank you so much for sharing the content, helping get the good word out there. All right, let's take a look at the market today. What happened on Friday? See how we can prepare ourselves for today. All right, so my SPY pivot this morning, 692.10. Above it, I'm a bull. Below it, I'm a bear. So we are way below it. And this looks like a pro gap to me. That means we don't trade with the gap down. We trade against it, meaning we probably might be bullish. We'll see what happens. We'll take a look at it before the video ends. All right? Just before the video ends, we'll take a peek at it, see how we can extrapolate what's going on. All right, IWM made a new all-time high Friday. Diamond Dow made a higher high, higher low, closing inside a bullish trap over the rising 17. SPY made a lower high, lower low, closing inside the bullish trap over the 17. QQQ made a lower high, lower low, closing under the bullish trap, but over the 17. SPY closed with a 2-hour downtrend, 10-minute downtrend. FNGU, stinker, made a lower low, lower high, closing under a bearish trap under the falling 17. Gold and silver made lower lows and lower highs, closing inside bullish traps over their 17 EMAs. USO still in an uptrend, made a higher low and a higher high, closing inside a bullish trap over the 17. UNG also made a higher low and a higher high, closing under a bullish trap and under the falling 17. US dollar index still in a daily uptrend, having a pullback today, and closed near the 99.05 area. SPY max pain for today, 692, with a put to call ratio of about 1 put for each call that expires today at 4:15. Remember, those index options expire at 4:15. Security options expire at 4. If this is your first time, these are all in bullish daily uptrends over the 17 EMA. These are all in bearish daily downtrends under the 17 EMA. These with the star have been building out a bullish launch pad from which to launch higher. If they had a star over here, they would have a bearish bear flag, or I call it a platform from which to dive lower. All right, we'll see what happens today. Big gap down, so we'll see what happens with that. All right, let's take a look at the markets. All right, so let's move this in. Let's go to this one. Let's go to SPY. And let's go over to, I got that one. That's the one I want. I want the 2-hour. All right, let's take the 2-hour on. There we go. Okay, so 2-hour, we got a 2-hour downtrend. See the cross underneath there? Got a bearish cross on the 2-hour downtrend. You can see we're way down here. So 2-hour downtrend coming into the close on Friday. On the 10-minute chart, 10-minute, we have, you can see the yellow 3 EMA and the candlesticks underneath here. So you can see the white line, that would be the 8 EMA, 3 EMA is the yellow line. So we got a 10-minute downtrend coming into the close. Now they've gone pretty far on that downtrend. I would probably be looking for the higher low from which to trade it back to the upside, okay? So there's a 10-minute downtrend coming into the close, 2-hour bearish cross on the daily, on the 2-hour chart. On the daily chart, we got a lower low and a lower high, but we closed inside a bullish trap over the rising 17 EMA. So that'd be bullish. If we look at that with the quad lines on it, that's way up there. You can see here's our April low. All right, and here's our quad lines way up here. So this would be bullish, still up here, and in a daily uptrend. See, top of quadrant 4, bullish, still in a daily uptrend. Now, I don't know about today, but they're going to make a lower low, and it's underneath this candle here that spikes below the 17. So that's going to put them in a downtrend status, okay? But we'll see if they continue to keep moving lower. So there's SPY on the daily chart, still bullish, still in an uptrend as of Friday, as of today, not so much. Again, they just made a lower low right there. So, and actually got below this one too. So probably maybe coming down here over the next few days to these low anchored VWAPs, which start back in April and May. You can see those anchored VWAP lines. We'll see what happens. All right, so there's SPY on the daily chart. We'll see if they recover today. Maybe they do. We'll see. All right, so this SPY on the daily chart, still bullish and in an uptrend up here. Okay, so that's SPY. Let's take a look at the game plan. We'll look at that on the 15-minute chart. Okay, so it's kind of irrelevant today, I know, but it was made up, and we may recover. We may make it all the way back up to the red erases green line or even the pivot. We'll see what happens, all right? Red erases green underneath, above, all right? Green erases red, all right, for price above 695.45, okay? That was the green erases red entry, okay, above 695.45. Nowhere near that. SPY pivot 692.10, again above it, I'm a bull, below it, I'm a bear. Red erases green was underneath 690.10. You can see we're down there at 682, so we're well into the red section. Might not be the time to play bearish at that time or trade bearish, being since it's close to being a professional gap, meaning we would trade it in the opposite direction of the gap down. So probably look for the higher low to trade it bullish back up to the midpoint. So there's SPY. I trade 4 DTE and 11 DTE Friday options on the multiple of 5. I like Friday options. They got a lot of open interest. I like the multiple of 5. They got a lot of open interest. So I trade those Friday options specifically for the open interest that usually generates a tight bid-ask spread. And that's what I like. I don't like a lot of slippage if I have to stop out. So for that reason, I choose the Friday options on the multiple of 5. I like strikes $2 to $15 out of the money. Now, I'm not opposed to trading 0 DTEs. I'm not opposed to trading in the money calls. Okay. Matter of fact, if you want to buy in the money calls, I get it. You're going to get a much better performance than I will, but you will also be putting up much more risk than I will. Okay. And I like the idea. I am under strict risk management guidelines. So for me, I would rather take on less risk, all right, and I will sacrifice some performance for that. It's your call, all right? I'm not going to tell you what to trade. I'm telling you what I like. I like less risk, and for that reason, I choose the out-of-the-money calls or the puts, either one, okay? So for that reason, I like those, okay? So I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. Now, if a 10-minute uptrend were to manifest down here or way down there where the professional gap is, okay, and it starts moving up, I would not be opposed to trading the uptrend as long as it breaks the bullish 10-minute rubber band candle. All right, long before it gets to the pivot or even the green erases red entry up here. Same with the downtrends, okay? If a downtrend were to manifest up here, long before it gets to the pivot or to the red erases green entry down here, okay, I'm not opposed to trading it. I would just like to see it break the bearish 10-minute rubber band candle, okay? So those are my rules. You got to have some rules if you're gonna trade counter trend. You got to have some rules, okay? So on a bearish gap down, if we're trading bullish, that would be counter trend. in the market overall, we're bullish on the daily, so we would be actually trading with trend on that one, okay? But it's a pro gap down, so sometimes you kind of want to stand aside till you get that daily uptrend to resume. We'll see what happens. Now, you can see we broke the 17 on the daily chart. We haven't closed down there yet, all right? So here's the 17, little valley here that breaks through the 17 EMA. So that means we're in a downtrend. We actually broke this one as well. So both of them, okay, breaking those lows equates to a downtrend. Now, we haven't closed out the day yet. We very well may close up here. I don't know. Okay, I doubt it, but we very well may close way up here. All right, so we'll see what happens, okay? Because if we close up here, it's going to be no downtrend because we closed up here, all right? So we'll see what happens. So there's SPY on the daily chart, okay? So let's take a look at, went over the game plan. Let's take a look at weekly chart, all right? Weekly still in an uptrend. You can put the quad lines on there. Okay, quad lines way up here. Okay, April low, top of quadrant 4. See all the green dots? We're still bullish and still in an uptrend. Same on the monthly chart. Okay, still bullish, still in an uptrend right now. All right, let's take a look at QQQ. All right. And on QQQ, we'll start with the 10. So on the 10-minute chart, we've got not only a cross, we've got a bearish 10-minute downtrend coming into the close. Kind of a weak 2-candle downtrend, but you can see they're way down there. So weak 2-candle, 10-minute downtrend. On the 2-hour chart, we have a 2-hour downtrend. The 3 is underneath the 8. The candlesticks are riding on top of the under the 3, and the candlesticks in the 3 are riding underneath the 8, and they're all riding underneath the 17. So we got a 2-hour downtrend coming into the close. A weak two candle 10-minute downtrend coming into the close. On the daily chart, we got a lower low, got a lower high. We closed underneath the bearish trap, but over the rising 17. We closed over the all-time high, anchored VWAP, which is this pink line right here. You can see on Friday, we closed at the top of quadrant 4. Okay, this is our April low. Way back here, that's bullish and still in an uptrend as of Friday. We'll see what today's candle produces. Okay, it may not close down here. It may close up here. I don't know. We'll find out what happens. So there's a daily chart. We're still bullish, still in an uptrend. We'll see where they close today. Weekly chart, still bullish. See how the green dots? Top of quadrant 4, still bullish, still in an uptrend. Nothing's broken yet. Monthly chart, still bullish, still in an uptrend. Back to the daily chart. Okay, now if they break this low, or even this low, okay, they're going to put themselves in a downtrend. You can see they broke both lows, okay? So that's going to put them into a daily downtrend. We'll see how far they want to go. All right, so there's QQQ. We'll find out later today on where they close. On the game plan, all right, so we got a game plan for QQQ. Not that it's going to matter much. Again, it's going to be a pro gap, all right, meaning they gapped so far that they've hit support, and they're probably bouncing back up in this direction. Like I said, we're going to wait and see where they close today. All right, so QQQ, I like 4 days till expiration and 11 days till expiration. I like the Friday options on the multiple of 5, specifically for the open interest. I like a tight bid-ask spread. Usually when you got a high amount or number of open interest in a contract, you get a tight bid-ask spread, and you get a whole lot less slippage when you go to stop out. Okay, again, same thing. I like $2 to $15 out of the money. All right, again, I'm going to repeat myself. I am not opposed to trading 0 DTE options. Okay, I actually trade them myself. I am not opposed to trading in the money options, all right? I just prefer, okay, the out of the money because I am under strict risk guidelines. So I like to have less risk on the table, all right, in case things go against me. All right, so for that reason, I choose the $2 to $15 out of the money options for that reason. Okay, I trade 10-minute uptrends over VWAP, and I trade 10-minute downtrends under VWAP. Same thing. If a 10-minute downtrend were to manifest up here, I'm not opposed to trading it. I just like it to see it break the 10-minute bearish rubber band candle. If a 10-minute uptrend were to manifest down here, way down here where the pro gap is, okay, I'm not opposed to trading it to the upside as long as it breaks that bullish 10-minute rubber band candle. Okay, so I like, my favorite trade, all right, is the 10-minute uptrend over VWAP that resides inside the 2-hour uptrend. Now, we don't have either one of those right now in SPY or QQQ. It's going to be a while. But it could happen, all right? Just saying, it could happen today. So that's my favorite trade, is 10-minute uptrend over VWAP that resides inside the 2-hour uptrend, that resides inside the daily uptrend, that lives inside the weekly uptrend, inside the monthly uptrend, all right, all over the all-time high anchored VWAP. That's my favorite trade. Okay, probably not going to see that one today. Probably not going to see that one for maybe 2 or 3 weeks. We'll see what happens. All right, based on the gap down that we had today. So we'll see what happens. So there's QQQ. There's our QQQ game plan. Went over the SPY game plan. Let's take a look at IWM. And we'll look at it on the daily chart. And we'll put it with the quad lines. Okay, so you can see IWM made a new all-time high. High there is 267.21. The high there is 267.05. So new all-time high for IWM. All right, here's our April low. This is our rally. There's the all-time high way up there. So that's bullish and still in an uptrend, okay? On IWM, still bullish, hasn't broken anything. Still bullish and in an uptrend, IWM. Like I said, we could recover today. IWM continues to make new all-time highs. They could drag the SPY right back up there. God knows FNGU is not helping us out. All right, so let's see what happens. All right, so let's take a look at Diamond Dow. All right, Diamond Dow, look at that. 1, 2, 3 tops, 4 tops up here, up at these highs. Diamond Dow Friday. Okay, looks like we got, I'm going to pull up my my notes. So I got some notes. Okay, so Diamond Dow made a higher high and a higher low, closed inside a bullish trap over the rising 17. Okay, so it's kind of hard to see that. So here it is, higher low, higher high, closing inside. So it's underneath that 3 EMA, inside the bullish trap, but over, see the green dots, the rising 17 EMA. Not a new all-time high, but pretty darn close up there. So this Diamond Dow, obviously top of quadrant 4, that's bullish. Here's our April low. Okay, bullish and in an uptrend right there. Pull back today. Again, we'll see where they close. There's Diamond Dow on the daily chart. All right, let's take a look at FNGU. Here comes Stinker. All right. Stinker made a lower high and a lower low, closing underneath the bearish trap. No surprise. Underneath the falling 17, about to break the support line right here. Not very good. Not good at all. Not good for the markets, okay? We'll wonder if the bulls will rescue this one. They did over here. All right, they rescued that one. Will the bulls rescue this one? We'll find out in a few days. Well, we're going to find out this week. Okay, so there's a daily chart. We are not in the upper third. Okay, we're neutral and still in a downtrend on Stinker. All right, and well underneath the all-time high anchored VWAP, which is the pink line up here. Okay, so, and we're breaking another level of major support right through there. So things not good. Things are not good. Unless the bulls rescue this, we'll see. So there's stinker on the daily chart. It's in a downtrend and it's neutral. Okay, it's just not ready yet. And that would be the big cap stocks. That's probably 10 of the most heavily weighted securities inside the QQQ and the SPY. Hence, you can see them dragging those two indexes lower and lower. Okay, so that's stinker. All right, let's take a look at silver and gold. And I saw gold way up there this morning. So gold, as you can see, is making a new all-time high today. All right. Friday's candles, a lower high and a lower low, closing inside a bullish trap over the rising. See the green dots, 17 EMA. Top of quadrant 4, that's bullish and in an uptrend. Okay, here's our 2022 low. It's bullish and in an uptrend and making a new all-time high again today. Let's take a look at silver. Silver making a new all-time high. You can see it up over the quad lines over here to the right. Okay, so silver, lower high, lower low, closing in bullish trap. Over, see the green dots rising, 17 EMA. Okay, top of quadrant 4, obviously bullish and in an uptrend because it's making a new all-time high right there. And here's our 2022 low right here. It's the origin of the move. And there we are making new all-time highs early this morning. So there's silver, bullish and in an uptrend. Let's take a look at UNG. This one's easy. Okay, higher low, higher high, closing under a bearish trap. See the 3 underneath the 8, that makes it a bearish trap. Okay, so higher low, higher high, closing under the bearish trap. Under the falling, see the red dots, falling 17 EMA. It's at the bottom of quadrant 1, way down here, bottom of quadrant 1. Okay, so that's obviously it's in a downtrend, hasn't made any new highs in a while. So it's in a downtrend, so it's bearish and in a downtrend on UNG. Okay, made a new all-time low on Thursday. On Friday, they did a little bounce. Big bounce today. Look at this, 1214. Got to be that cold weather. Okay, so there's UNG, USO. All right, bring the mouse back over here. How do they get on? Okay, USO got a higher low and a higher high, closing inside the bullish trap. Okay, even though all the body's up over it, look where they closed. The bottom of the body of that red candle. Okay, it'd be the bottom of the body of a red candle. The top of the body of a green candle would be the close. So you can see the bottom of the body of the red candle is inside. See the 3 EMA up over the 8 EMA is inside the bullish trap over the rising 17, which is the green dots. Okay, we're up over the midpoint. That's nice. I like to be over that 2022 post-COVID high anchored VWAP. That's post-COVID rally right there. And there's the high anchored VWAP. We're still underneath it. We were over it. Not Thursday, but Wednesday and Tuesday. Spent some time over it. That was nice. So we're still neutral. All right. We're not in the upper third. We're not in the lower third. Still neutral and in an uptrend on USO. Let's take a look at, let's see, we did oil and gas, did some commodities. Let's take a look at T2101. All right, T2101. So we kind of melted off a little bit on Friday. Nothing really bullish. But we didn't increase in participation. So that was a bullish outlook for me. So I like that. Don't like the melt off today. So there's the 15-minute chart of, this is market breadth. You can just substitute the word participation for the word breadth. All right, so this would be a participation index. And you can see we get just a little bit of melting off on the participation on T2101, T2122. Okay, we stayed above the midpoint. Everything was looking good. Okay, I got to tell you. So it may recover in one day. We'll see. So T2122. Buyer's chop zone. We came down here, made a brief appearance, stayed for an hour, maybe a drink or two. Okay, had some canapes. All right, and then we came back and we came to spend the rest of the day in the buy zone. So nice. Don't like the lower low, but I do like the recovery back up here in the buy zone. So there's T2122, still bullish up there in the buy zone. That's where we left off Friday. Not saying definitely not bullish this morning, okay? But we may recover. We'll see what happens. Okay, so there's T2122, T2123. Of course, made on the 15-minute chart, made some new all-time highs. Up over the rising 200 SMA. That's where you want to be if you're a bull, all right, is up on top of that rising 200 SMA. So that is bullish, and then an uptrend on the 15-minute chart. T2123. T2123, 3-bar chart, okay? So here's our April low. This is the origin of the rally. This was the all-time high right up here. Okay, then we had a pullback low to the neckline of a head and shoulders pattern right here. Okay, pullback low to the neckline. The neckline held. All right, price bounced. It took it a little while, but it did bounce. All right, and it found some support or found a home. All right, I'll call it a bull flag up over the flat 200 SMA. All right, so we got kind of a measured move to the upside. Nice little rip up to the upside to produce some new all-time highs. So T2123 3-bar chart at new all-time highs. That is bullish and in an uptrend. Like I said, the market is still bullish. All right, not today, not this minute, but it is still bullish. You saw Diamond Dow hovering at the highs. You saw IWM making new all-time highs. You see gold and silver making new all-time highs. Market's still bullish, okay? Maybe not this minute, maybe not today, but it's still bullish up there. Okay, not to say there won't change. Not going to say it's going to be bullish tomorrow or whatever. We'll find out. Okay, so there's T2123 3-bar charts. Take a look at Stinker. And here's Stinker. Nice gap down today. Wonderful. Okay, so here's Stinker. Has a, on the 16th, okay, you can see they had a bullish gap on Thursday, and the bears filled the gap. We had a bullish gap on Friday, see we gapped up, and the bears filled the gap again, all right? All right, so I don't know where the bulls are, if they're unaccounted for, or they're still on the run, they're still sleeping. I don't know, but they're not around, all right? So here's FNGU, 15-minute chart. Move down and over to the right. That's a bear flag. Okay, so what happens is that's a platform from which to dive lower, and they did dive lower this morning. Okay, so downtrend on FNGU, 15-minute chart. Price action right here underneath the falling 200 SMA. All right, so downtrend. And bearish, all right? If we were to look at this and put the quad lines in there on the 15-minute, okay, so there's your all-time high. Here's where we were before this, okay? So that would be the bottom of quadrant 1, obviously bearish and in a downtrend right there on FNGU. Let's take this off because we don't need it right now. And you can see underneath the pink line, that's the all-time high anchored VWAP. Okay, so, and breaking support, all right, that's the green line right there, so not very good. All right, let's take a look at the economic package for this morning, and we want this. Okay, here's our dollar index. This is the dollar index. So here's 2025, hard to see, small print right there, but there's the high for 2025, up there around 110, okay? And then we had a double top, failure to make a higher high. So they went around and they checked the recent lows, and the recent lows didn't hold. So they checked the next recent lows, and those didn't hold. And they checked the next recent lows, and we held underneath this low right here. So we got a bear flag, and we're bear flagging right underneath support, which was once support. Now it's minor resistance, okay? That would have been major support. These peaks would have been minor. This would have been major, so we broke major support. We actually came back and did a double top recently, but we failed to make a significant higher high, just like we did back here in 2025. So price came down and moved over to the right in a bear flag. All right, so this would be a platform from which to dive lower. We'll see what happens. Okay, so we like a weak dollar as investors, but as consumers, it sucks, all right, because it's going to cost us more to buy the same goods and services that we bought last year, all right? So that's the fact, because our dollars won't be as, our dollars that we earn are not going to be as strong as they used to be, all right? But we're in this bear flag. We are in a daily uptrend, okay, until we break this low. We got a high here. We made a higher high. That put us in a daily uptrend. Yesterday's candle, Friday's candle, big red candle right here, kind of a bearish engulfing. And we closed down here around 99.04, 99.05. Okay, and we're diving even deeper today, this morning, which is bullish, really, because a weak dollar as investors helps us be more competitive with our goods and services in foreign markets, all right? So that's good, all right? That means more revenue coming in on companies from the USA, so that would be good, but we'll see where that takes us right now. A couple of red candles is good, but we still haven't made a lower low. We're still in an uptrend, all right? But we've got a kind of a harsh pullback in that uptrend right there. So we'll see what happens. So there's the dollar in a big bear flag, but in a daily uptrend within the big bear flag. Still have not breached the top of the bear flag. So we'll see where we go with that. Maybe we head lower. We'll see. So there's the dollar. Let's take a look at Max Pain for today. This is SPY Max Pain, 692. Put to call ratio 0.95, so just under one put for each call that expires today. And then we've got earnings reports. Let me just say that the banks didn't do, I don't know whether they did good or bad. I didn't look at them, but the market doesn't seem to like a few of the big boys, all right? I'm just going to put it that way. Because they did like Goldman Sachs, but they didn't seem to like JP Morgan, which was a headliner in the financial sector. Okay, so we'll see what happens with that. Okay, so Netflix going to report today, all right, this evening. That's a big boy. That's $373 billion, okay? That's well over a third of $1 trillion. That could be a market mover, a market shaker. All right, 3M and some other familiar names are going to report later this morning or this evening or today sometime. All right, not really headliners, not really market movers, but overall the banking, the financial sector, especially, and I'm talking about investment banking. All right, which should have got a lot of love due to they facilitated the new all-time highs, didn't seem to get any love in this earnings round. All right, so we'll see what happens. Goldman Sachs did. A couple of the other big ones did not. Okay, so tomorrow we got Johnson & Johnson, and that's $500 billion, $529 billion. Schwab, $182 billion. Prologis, $123 billion. Okay, so Johnson & Johnson, not really, even though it's $500 billion, it's not really a market mover, okay? The market looks at tech, mostly at tech and financials, all right? Even though industrials are part of the Trinity, you know, in order to have a nice, robust rally, you need semiconductors, you need financials, and you need, did I say industrials, semiconductors, and financials? Okay, that's the trinity you need to have that nice, robust rally. Okay, which we've had for a while. All right, things have been looking good. So even when J&J reports big, okay, that'll probably fall under the retail sector, which is nice, but not really a market mover in that sense. All right, Schwab will be looked at because it's a financial. All right, this is J&J is more of a defensive sector in that they're going to sell Q-tips. Everybody needs Q-tips. When you run out of Q-tips, you're going to go get another box of Q-tips. Same with rubbing alcohol. It's that kind of stuff. All right, J&J, as well as I'm sure they sell some drugs and stuff too. But anyways, they're more of a defensive sector, even though I would probably call them one of the big boys in the defensive sector. Okay, so that's coming in tomorrow. All right, you can see Schwab's going to report in the morning. Prologis, which is pretty sure that was tech, but they're going to report in the morning. Usually tech reports in the evening, just like Netflix is going to report in the evening tonight. GE Aerospace, and by the way, they're also a defense contractor. $342 billion. Okay, that's a third of $1 trillion. Procter & Gamble, another one that falls into that defensive sector, cyclical defensive sector. Another third of $1 trillion there, third of $1 trillion on GE Aerospace. All right, so GE is going to report Thursday morning. Procter & Gamble is going to report Thursday morning, third of $1 trillion there. 211 billion. Abbott Labs, there's drugs. Intel's going to report in the evening. That's tech. Okay, so Thursday, 205 billion. Intuitive Surgical, 189 billion. I'm not even going to guess what that is, but I'm going to call it medical supplies, and I could be wrong. 189 billion. They're going to report in the evening along with tech, and that's Intel Corporation. All right, so that's Thursday evening. Capital One as well in the evening. 152 billion. Freeport McMoran, again, some familiar names. CSX, that's railways. Freeport McMoran, I'm pretty sure that's materials. All right, raw materials like copper, silver, gold, things like that. Not to say they don't do copper, silver, and gold while they're out there, but I think they basically go after a lot of copper. I think is their main thing. All right, and probably lithium, and maybe, who knows, I'm sure anything that they can sell for $1, they'll probably go after. J&J spun their consumer goods unit last year, so there goes Kenvue, and trades under the name Thanks Jim. All right. So again, some big reporting day for Thursday, as well as tonight. We got the Netflix going to report tonight. So there's Thursday. Again, more familiar names, but nothing that's going to be market moving. I don't think any of these are going to be market moving. They're all under a third of $1 trillion in market cap. Not to say that they won't help out their sectors some. All right, on Friday, what do we got? We got Schlumberger, I think. Again, some more familiar names. That would be in oil and gas servicing. Schlumberger, all right. Ericsson, I'm pretty sure that's electronics. Not positive, but I'm pretty sure. All right. Again, familiar names, but nothing that's going to be market moving Friday or Thursday. Wednesday, again, J&J. Nothing really market moving there. People like to watch tech, financials, industrials do make the headlines, but not as much as tech. All right. Semiconductors are the big high flyer. Okay, those are the ones you want to watch. Intel, there'll probably be more eyes on Intel than there will be on J&J and Procter & Gamble combined. Okay, Tuesday we got Netflix, 373 billion. Okay, you'll probably be looking at subscriptions. All right, they want to see an increase in subscriptions for Netflix. All right, so that'll be on the calendar tonight. All right, so that's earnings for this week. Economic calendar. All right, the headliner is probably going to be the delayed GDP report. Okay, don't know why it's delayed, but it is. All right. I thought we got a report recently that was not delayed. So we'll see how that works out. Anyways, we took off yesterday in observance of Martin Luther King, one of the kings of freedom, right there. Okay, so nothing to be announced today. Tomorrow we've got housing starts and permits, the delayed report. Don't know which week it's from. 8:30 tomorrow morning. Construction spending, the delayed report. 10 o'clock tomorrow morning. Construction spending again, another. So probably 2 different weeks of construction spending. So if you didn't get one, we're going to back it up with another one. All right. So they're both delayed reports. Pending home sales index, 10 o'clock. Not that we didn't get a lot of pending home sales indexes last week, but we're going to get another one. So that's Wednesday. Really light day for Wednesday. You got 3 delayed reports. I think the headliner is probably going to be GDP, the delayed report on 8:30 on Thursday. Jobless claims at 8:30 on Thursday. Personal income and outlays, another delayed report, 10 o'clock on Thursday. Personal income and outlays. Oh, we're going to get 2 of them, all right? 2 of the delayed reports, probably from different weeks, all right? And a natural gas report at 10:30, okay? Petroleum report should be, where's the petroleum report? Petroleum report's going to come in at noon, right there. And on Friday, PMI composite flash, 9:45. Consumer sentiment at 10 o'clock. Usually there's a rig count at 1. I guess they don't want to tell us about that anymore. So it wasn't a market mover anyway, so you're not missing anything. All right, let's take a look at the market, okay? Because we want to see what we can gather from this. So let's start off with SPY, because that's the one I trade the most. And we're looking at it on the 5-minute in the pre-market. All right, and this is FNGU, so I don't want to disturb that. Let's go over here and pick up SPY and pick up the 5-minute. Okay, you can see a big gap down. See that? Put in a low. So what we want to see is, and they're up over VWAP. So we want to see them put in a higher low. So here's a VWAP pullback. And I like all these tails that I'm seeing right here, because that's a higher low. All right, so if that low holds, all right, so for me, I'm going to pick off the lows of probably 685 calls, 0 DTE, all right, or even 1 DTE, 685 calls. I'll probably be looking at those, or 690 calls, 1 DTE or 0 DTEs right there. If this low holds, okay? If that low does not hold, then I'm probably not going to trade bullishly. But I want to see this higher low hold. And if that's able to hold, I'll be looking at picking off lows of candles. If that breaks, I'm probably going to have to get stopped out right there. Because currently we got a 5-minute downtrend. On the 15-minute chart, we got a crossover. On the 10-minute chart, we got a 10-minute downtrend. Okay, I'm not interested in playing bearish unless it breaks this low right here. Okay, I'm not interested in trading bearish unless it breaks that low. If it breaks that low, I want some puts, and it's going to be the 675 puts. All right, that's what I'm looking for. All right, I'm looking for this low to hold. As long as this low holds, I'll be interested in trading bullish to the upside, because it's a big gap down. And coming back, where would I expect them to come back? Well, pre-market high would be the first stop right here. The next stop would be, see the candy stripers right here, red, green, red, green, red, green, right there. That would be my next stop. If they get on top of that, it's right up here between that peak between two valleys and this valley between two peaks. So it's a range of this area. Okay, don't want to get ahead of myself. We haven't even made a new high yet. All right, on a bearish gap down. But I'm looking at this big red candle as possible exhaustion. So I want to see that candle hold. All right, if that candle holds, I'll be looking to pick off the lows of call candles, call option candles, probably the 685, 686, maybe 690. All right, 0 DTE. That's my plan for this morning because it's a pro gap down. Okay, they went further than what they needed to go, and they came right into support. Okay, so where's the support? All right, so here is an uptrend line. All right, see the lows that bounced off of here before, bounced off of here before, bounced off of here before, got underneath it, and the bulls rallied it back up, bounced off of here before. Okay, so for that reason, we are at support, and we're bouncing right here at support. So for reason, that is a pro gap for me, and I'm be looking to trade it based on if that low holds. Okay, if not, I'll be looking to be a bear underneath that right there. And my first trip would be to the breakup candle low right here. Okay, at 675. Second one would be this valley low right there. Okay, so those would be my downside targets if we break the pre-market low. We'll see where we are, what happens when we open up here. Okay, so I think we're going to get a higher low here, and we'll be looking at trading calls back up to the upside. Who knows? They could rally this thing all the way back up here, all the way up to 695. We'll see what they want to do. All right, they're not going to get there without a 10-minute uptrend, so we'll definitely have something to trade if they decide to do that. All right, so I will see you guys in about 35 minutes, and we'll open up the markets. Text, just checking to see if you grabbed UNG on the web. No, I did not. I did not get your PM. I did not get your PM. So I would have loved the PM, but I did not get it. You did well. Congrats, Tex. So Tex is sharing that he tried to alert me. I didn't get it. I don't know why, but he tried to alert me on the cold weather snap, which he loves to trade UNG. All right, and of course he bought calls on Friday, and bingo, right? Nice windfall for Tex right there. Look at that gap up. $2 gap on a $10 stock. That's like a 20%, 20%, 25% there almost. Beautiful, beautiful trade, Tex. Couldn't be happier for you. Yep, beautiful trade. Wish I'd have got some of that. All right, so I'll see you guys in about 30 minutes, all right? So we can open up the markets, and we're looking at this as a pro gap down, and we're looking to get bullish on the way back up, all right, as being hit just before support. All right, I'll see you guys in 30 minutes. Thank you.